All right, good morning, guys. Today is Wednesday, September 13th. As usual, doing analysis for US 30, gold, and EU. So I'm looking at this trade. So before I start off with the rest of the things that I do, so this morning we had a test. This is on the hourly time frame. You can see we have a double SAR on the hourly time frame. So we had a candle that tested it. The next candle, CPI candle, dropped and then rejected from it. So that's the initial trade I'd sent. It went like achieved a 1:1. Unfortunately, I got taken out at break even for that trade. So we might be getting the same trade. But for me to take this trade, I need this hourly candle to close below this double SER. If that doesn't happen, I won't be taking that trade. So you can see we have 16 seconds for that to happen. Also, I normally talk about, always asking yourself, what do the wicks tell you? So right here, the wicks tell us that there's a lot of buyers that are sitting down here, but we also have wicks to the upside. So for me to take this, doesn't look like it's, yeah. So that trade invalidated. So you can see this again could have been so initially this was the test candle, this was the rejection candle. Now this became again the test candle, and this one was going to be the rejection. So unfortunately, on the hourly time frame, there's no entry on gold. Um, so that I was hoping we got that. So unfortunately, that did not pair in. For the 4 hour time frame, let's see what we have. So 4 hour, I don't even see anything lining up for gold on the 4 hour time frame. So nothing for gold until later on in the day. EU, nothing on the hourly time frame, nothing on the 4 hour time frame as well. Because if we look at the daily bias here, daily bias for me for US 30 is bullish, gold bearish, EU bearish, the dollar bullish. So since we don't have any entries on the 4 hour and 1 hour, we can now go to the 30, 15 minute and 30 minutes. So I'd sent this trade ideas. Unfortunately, US 30 pumped up so heavily and did not give me any confluences. Now, what do we have here? Looking at currently where price is at, you can see this 30-minute candle, it broke above. So here we have a double SAR on the 30.
Bro, I think it cut off the audio.
My bad, my bad. Thanks, man. This mics have like a touch to turn off audio. But anyway, thanks, man. We may be forming a fair value gap soon here. But anyway, so for this trade, I would wait for this trade right here because it has already validated. You have your break, you have your continuation. Now, if you right, I always tell you guys, you can take the whole risk and go in with the full risk you want to risk, or you can enter with half the lot size. So even for this one, I wouldn't enter with half the lot size, ideally because of where my stop loss is at. Or you can wait for price to get down here. So which is what I will do. I'll wait for this buy on US 30 down here. Also looking at US 30, we have all these wicks. So you always ask yourself, what are the wicks telling you? These wicks are telling you we have a lot of buying pressure that's in these zones. So that's one entry that's right there. We had a possible test and rejection of a triple buy. This was on the 15-minute right here. So actually, so for the 30-minute, there's a break and continuation there. For the 30-minute, there's a test and rejection right here. So this was another entry for US 30 right there. If you're using this, because you see this double SAR that's below here, and then that would have been the test candle. This would have been the rejection candle. Remember, rejection candles don't have to come back to the zone. You just need, at the very least, one of the candles to test or reject from that zone. So that trade already went all the way through. So this is the next best trade right here. Either that on the 30-minute, or we go down to the 15-minute. So on the 30-minute here, I would we'll switch to the 5-minute and look at it. So on the 15-minute, this is the trade that I was waiting for. So this was during news. The 15-minute candle, this was the test candle, and this was the rejection candle. And again, for me, this is not a risk I was willing to take, especially it was 30 minutes before New York session. I do not trade. So this was another possible trade right there. And I'd sent all of this in the trade ideas section. So this was another trade right there, because this, and you can see how it would have hit stop loss if you jumped in on impulse. So if you're trading, if I was trading this zone right here, and my stop loss is literally here, my stop loss is not even near the SARs I'm trading. So this is why, because you can see how you can easily get faked out of this move. So which is why for me to be safe, I always want to wait for a retracement. Now on the 15-minute time frame, let's see what we have. I can see test. So you see this candle right here. It tested, we have a triple. Actually, this is a triple. This is a triple SAR zone right there. This is a triple SAR zone. Let me redraw it. So this right here is a triple SAR zone. So keep in mind, if I don't find entries on the 4-hour and 1 hour, that's when I come down to the 15-minute and 1 minute. So again, we're not in this trade. So this right here, we're looking for the other one. This test of this zone, rejection off of it, this was the other trade right there. But again, I wouldn't have taken this as much as it would have ideally almost hit TP or fully hit TP right there. You can see my stop loss is not even below this zone. So then I move on to the next trade. So if I wasn't going to take that, you can see now we have a break and continuation. So we have this candle that broke a triple SAR, double SAR. So that's the break candle. Then we have the rejection candle. Then you have that. Now this one, is it a trade I would have taken? No. Why? Because for me to take this trade, I would have needed my stop loss to be below this SAR. So you guys can see how it's important to always make sure that you are where your stop loss is at. So this is the next best trade right here. So keep in mind, this is valid, but you can see you could have gotten taken out at stop loss. So now what we need to do what we did yesterday. So the trade has come back. So this is the break and continuation of this double SAR right here. Now, what we need to do, go down to the 1 minute or to the 5 minute and find two live a break and continuation on the 5 minute or on the 1 minute, because the trader has already validated on the 30-minute time frame, but the height of the trade, based off of how far the trade entry would have been, it wouldn't have allowed us for a stop loss to be below that zone. So now we need exactly what happened yesterday. We need 2 1-minute candles or 2 5-minute candles. We can drop down to the 1 minute, 2 1 minute or 2 5, like ideally what happened here. And then at that point, I will buy US30 because the trade is already valid, but I chose to be safe and wait for a retracement to the downside. So right now is when I'm looking for that buy entry. So as we wait, this is perfect. The more US30 keeps dumping, that's perfect. Because until we get this, that's the only time we'll enter. And I know I mentioned to you guys yesterday that sometimes what I would do on the live session, not on the live session, if I was trading by myself, since these are the double SARs right here, if price had gotten here, sometimes I would enter on impulse, but I don't like doing impulse entries when I am on the live session. But sometimes if I'm trading by myself, I'll do an impulse entry. So as we wait for US30 to form a break and continuation on a live 1 minute SAR, let's look at what we have. Yeah, unfortunately, so, you know, we missed that gold trade because it did not validate on the hourly. I wish it had, because we would be in some nice profit. Unfortunately, this candle
I'm in that trade on gold. It faked me out. Once I'm gonna really try for the next 3 months to master this strategy I'm learning, because it works, but there's certain things that if you forget, like with the strategy, there's normally a 25 to 50 pip stop hunt once it reached the high or low of the day. So that's what it did. it went and took the stop loss, and then it went down.
Yeah. So this one as well. So as much as the 1 hour did not validate, it invalidated the last 30 seconds or the last 10 seconds. I mean, no rush. I do see a lot of opportunity on gold today. So this is the same also trade that sent in trade ideas and got taken out at break even. So I do see the same trade. So if you guys can see here, this is a 30-minute double SAR right here. Also, actually, wait, give me a second, 20 minutes. So we have two double SARs. So we have this double SARs that are right here. So this right here is a test and rejection right there. Possible test and rejection. Now, if this candle closes, so now is when we have 20 minutes for this candle to close. Now, if I'm going to start prepping to see how far my stop loss will be, so if this candle closes here in the next 20 minutes, am I going to take that trade? Sure, I can take it, but I would have to be aware that my stop loss is literally at where the SARs are. So if this candle closes, good for you, Liv, if you're in the trade. But for me, I want this 30-minute candle to retrace and close below here. So that's the trade I would be willing to take. If this candle closes anywhere in the next 20 minutes, like closes here, I'm not taking this trade. Sure, I can enter with a smaller lot size, like 0.5%, but even when I'm entering with a 0.5%, keep in mind, I do not change my stop loss. So I always want my stop loss to be, now, if it's something like, say, this, then at this point, I can enter with 0.5% because even at that point, my stop loss is still above that double SAR. But anyway, that's one possible trade that's coming for gold. Also here on the 30-minute, we have this double SAR. So we have this one, we have that one. So this would be considered a break and continuation. So if this 30-minute candle closes below here, that will be a break candle. And then you'd have to wait for the next 30 minutes, which is to mean for this trade down here, you would have to wait until 11 a.m. Eastern Standard Time. So like 50 minutes from now. So we're not going to focus on that for now. We're going to focus on this one. So either way, I'm still, based off of how gold is bearish, heavily bearish right now, I don't think we'll even get the 30-minute, but that's fine. Let's see what's happening with US 30. That's perfect. We just need that live SAR. So I would want US 30 to keep dropping so that we get more room to come back to the upside. Now, gold on the 15-minute time frame, what do we have there? So on the 15-minute, this was the 30-minute zone. The 15-minute time frame we have, was this 30? Yeah, this was 30 as well. So the 15-minute, we have, oh, I deleted this. Okay, that's what I was wondering where those went. So 15-minute, we have a double SAR here. So for us to trade this, what is this entry? This entry is this entry would be a break and continuation. So this one would come, so this one would line up with the 30-minute that we are waiting. But now for this to validate as a break and continuation in the next 2 minutes, this 15-minute candle needs to close below here. And for us to even think about entering this trade, even if this candle closes below here, we would need to wait for the next candle, 15-minute candle, to reject off of this zone. So which is to mean even for gold, for us to take this trade, we would have to wait till 10:30. So gold, we know that the only trades we're probably going to get are 10:30. Give me 1 second. 912.7, 911.7. That's a 10 pip zone. We have two doubles right here. So this is also a double. I don't want to highlight it. I don't want to get too many highlights in here. But this top SAR right here is only like 6 pips away from this one. So actually, this can be a triple SAR. So anyway, let's see how this 15-minute candle closes. Let me first undo that zone. I'm trying, nowadays I try to get my charts a little more cleaner. But we have it's actually a triple. This top SAR, it does look like it's a bit far from the others, but it's actually not. It's actually like 6 pips away. So it's not far from the rest. So anyway, for what else was I looking at? So there's the 30-minute and oh, okay. So yeah, so in 15 minutes. Yeah. So we know that for us to even think about trading gold, it would either be 10:30 or 11 p.m. I'm sorry, 11 a.m. So either in 15 minutes or 45 minutes. So let's see what's happening with US 30. So US 30 is still dropping. So that is perfect. So I'll go back to the entry that we are looking at, or the entry that this is based off. And now here's the other best part. You see where US 30, if I go back and extend the lines, you see where it's coming back to? It's coming back to, looks like it's coming back to the original, towards the original SAR. So we have this 30 minutes. So you remember when I told you guys, most of these trades validated, but US 30 kept spiking up. So it's coming back to test all of this zone. So I know if we can't see anything here, this is a 15-minute zone. Then this is a 30-minute zone. This here is a 15-minute zone at the bottom. So this is perfect. What US 30 is doing right now is perfect because it's giving us more upside potential as it keeps coming down. So I think we'll get the US 30 trade today. I'm not sure if we'll get the gold trade today. So let US 30 keep dropping. And this is what I like about this strategy, that as much as I'm looking for buys, I'm not really jumping into any buys because I already have my safeguards in place. Like I know if an entry is so far away from my SARs, I'm not taking that trade. So as much as I'm looking for buys, I'm not just buying blindly, and I'm waiting for this to keep going. Now, the other thing it can also be doing, so if it's going down, what else can it be doing? It can be establishing possible on lower timeframes, like the 15-minute, it can possibly be establishing, if it's coming down and we already have the buy zones in place, or the double SARs or the test SARs, it means that price is already above those zones. So what can it be doing for us? It can be lining up test and rejection entries. So it can be lining up other entries, other new entries in the meantime. So for example, you see what's happening here. We have a 1, 2, 3, 4. Actually, you can even call it 5. We have a lot of buying pressure right here, or a lot of buy zones right here, because we have like 5 SARs right here. But the ones I've marked up are 1, 2, 3, 4. So a quadruple SAR zone. But in order for this to even buy this, you would need it would be a test and rejection, and you'd need 2 15-minute candles. So keep in mind, we are still waiting on the 1-minute candle because this trade already validated up here, but it was so risky to try to buy at the top. So we have a valid trade. So now we are just looking for that entry for US 30. So I can tell there's nothing happening on the 1 minute, because if price is dropping down heavily right now on the 15-minute time frame, you wouldn't be expecting a live SAR to be created on the 1 minute time frame. So let's just be patient. Let's see how gold closed. I think 1 15-minute candle was over. Okay, so let's see. So you see this 15-minute candle, it closed below this double SAR right here. And I did mention it can also be a triple SAR because the distance between this to this is not that far. So either way, whether you're considering the triple or the double, it has done a break. Now, also remember, we were, what time frame was that? I think we were waiting on the, give me 1 second. We were waiting on the 30-minute for the test and rejection. Okay. Yes. So this, okay, yeah. For this one, we need to wait for 10 more minutes. So remind me, guys, at 10:30, we need to look at gold. So this one right here, what gold has just done, it's created a break candle. So you can see this break candle has closed below either the double SAR, or if you want to look at it as a triple SAR, including this one to the top. So in the next 11 minutes, we'll have, if gold closes below here, this would be a nice sell on gold, and hopefully it closes somewhere here and not like here. So in the next 10 minutes, if this candle, current 15-minute candle, closes below this double SAR, which also would close below the triple SAR, this would be a sell on gold. And if you guys remember, this was, I think, the original trade idea I sent 1911. So if I go back to the Discord, 1911 on the 30-minute. Yeah, there was a 1911. So it's the same zone. So the zones I know I would be identifying here, you can see how they come back. So ideally the same zone for 1911. So let's see in the next 10 minutes whether we get this gold entry, and for US 30, let's see what we get on the 1 minute time frame. Let me know if you guys have any questions, because right now it's just a matter of waiting. So what we want is something like this, right? So we want a live 1 minute SAR to be formed, and then we get a break and continuation entry on there, and we get a trade like that. So that's what we want, or that's what we are looking for US 30. And ideally, why I want US 30 to keep dropping, you see all these wicks, this shows heavy buying pressure here, or it shows this zone as a demand zone. So I would ideally want my stop loss to be below these zones, because I know we have a bunch of buyers that are sitting here. And even if we were to turn on if we turned on let me turn on, delete this for now. If we turned off the markups indicators, so this is around the same zone as yesterday. So remember, guys, this is the trade we caught yesterday. So here we do have a 4-hour bullish zone. We also have a 30-minute and 15-minute, order block. We also have a 30-minute and 15-minute order block. If I turn on the zones, I want to see buyers sitting here. So you can see all these buyers that are sitting here for US 30. So this gives me a lot of confluences to enter this buy on US 30. Because I know we have a good amount of buyers that are sitting here. So just gotta be patient. And we have 9 more minutes for the gold. So either the 30-minute entry to validate or the 15-minute entry to validate. Again, I prefer not to trade, because most of these assets that I trade, US 30, gold, and EU, for a good amount of them, they move the same. So I don't like being in like a gold sell and US 30 buy, but there's definitely countless times or countless days that they move opposite. But sometimes if they are supposed to move the same and you enter a US 30 buy and gold sell, if you have like that nice risk to reward, like 1:2, even though you hit stop loss on one and hit full TP on the other, you're still up for the day. But right, 7. See how the so remember, guys, yesterday when we were talking about OddCAD and we talked about retail sentiment and how market makers play retail traders. So you see how for OddCAD, you have a lot of people that are trying to buy OddCAD. And yesterday I said, if I was a market maker or retailer, market maker or institution, I would literally just be tanking OddCAD to take off the stops. And you can see OddCAD has just been tanking even since we had the live session yesterday. So yesterday we covered how you can use market sentiment or retail sentiment as your daily bias. Personally, I use the SAR, but I normally say you don't have to use the SAR. You can, there's countless things you can use, but we talked about how for retail sentiment, you literally just have to do opposite of what the retail traders are doing. So for example, right here, NZD-CAD has 80% of retail traders that are trying to buy. So since it's correlated to like OddCAD, I'm pretty sure it's dipping as well. Gold, 67% are trying to buy. So that's another, if I was using retail sentiment as indicator of daily bias, honestly, I'll just be selling gold, because the idea here is that retail traders, a lot of retail traders do not make it or don't know how to trade. So it wouldn't make sense for market makers to trade in the direction of retail traders. And they wouldn't make too much money, because a good amount of market makers, they make money by liquidating other market makers, or also a good amount of retail traders. Yeah, so nothing really for US 30 is just ideally 50-50 or 58%. So not too big of a skew.
How
Okay.
much time you got? You got 6 minutes because it's coming down for you for gold.
For gold. Perfect. Yeah, so gold is 6 minutes. US 30 just print, so you guys can see that live SAR. Now here, we need this next 1 minute candle to close above there. So if this 1 minute candle in the next 13 seconds closes above this, now here's where I need to start thinking what risk I'm willing to take for this trade. See if it even, so it closes, just a second. See how it opens. Yeah, so it closed below. So if let me go ahead even delete this. So you can see the last 1 minute, the continuation candle closed below. So I'm not in the trade. Now here, if this candle closes above, I would need the next 1 minute candle to also close above. So that trade did not validate. So you can see at the very last second, it came back and closed below that SAR, that live SAR, and you can see that spike in liquidity. So that's perfect, right? It's just a game of patience. We need the same thing to happen, but we need 2 1 minute candles to close above a live SAR. Gold, we have 6 more minutes, and same thing, right? There's a bunch of fluctuation in the market. What? Wednesday, 10:30, crude oil. All right, so nothing on gold, on US 30 just as of yet. So if a live SAR has been created on the 1 minute and it's been invalidated, we might be getting one on the 5 minutes soon as well. So if this keeps happening and we get a 5 minute one, I will stick, or I will switch to the 5 minute time frame. But here, for example, in the next 24 seconds, if this closes above, I need to wait for the next 1 minute SAR. So just gotta be patient. All right, so we have a break. So we need the continuation candle. So we need this next candle to close above in the next 20 seconds. So now is when you need to start thinking of what entry was that in 15 minutes? So I'm thinking right now, I'm thinking of what risk I want to use for this trade. Given where it's at, I will use a 0.75. I'll go with the standard 0.75. Where did it close at? Man, this is crazy. Just a second. So it closed above. Yeah. So I'll enter that trade with a 0.75% risk. All right. And I'm in the trade right now. Now, since I don't like 1 minute candles, because they can literally blow your heart out, I will come back to where the entry was. Now, this entry right here was let me extend this lines right here. This entry was based off of the, so we have 2 more minutes also for gold. This entry was based off of the 30-minute time frame. 30-minute time frame. So this entry was supposed to be up here. But right, due to the distance, so this is the SAR we're actually trading, this SAR, double SAR that's all the way up here. But due to price action, I mentioned that that was not a good entry, or wouldn't have been a good entry to enter in on the close of the candle because of the distance of the stop loss relative to the SARs we were trading. So which is why we dropped down and looked for the entry, the same entry on the 1 minute. So the trade had already validated. So it was just a matter of dropping down either to the 5 and to the 1 minute and looking for that nice entry. So I know US 30 is pumping up. So we just need to get to our 1:1 risk to reward. We set break even. So the other thing here, I know I always tell you guys this, looking at the wicks. So we know here that we have, and I know I'll look at gold, we have a lot of buyers sitting here. So you see how we have this wicks right here. So we know that we have a lot of buying pressure that's right here. And we also know that we have a 4-hour bullish order block here. We also have in the zones, we have a lot of buyers and we have a lot of demand here. So we should be getting a nice pump to the upside. Now looking at gold, gold did not validate the 15-minute entry, right? Because here you had the break candle, the continuation candle did not close below here. So this trade invalidated. So right now, what entry would you be looking for this sell trade? You would be looking for a break, and you'll be looking for a break and continuation. So right now for gold, nothing on the 15-minute. On the 30-minute, that's where we had, on the 30-minute, we have, this was the test and rejection. So tests, rejection. So yes, this is a valid entry for gold. However, you ask yourself, how far again is the SCRs you're trading from? And I know you can see them here. So remember, TradingView has a limit based off of the candles you can extend the SARs to. So you can see they're right here. So sometimes I just try to go back a little bit and see if there are any that I'm missing. So here for this trade, there's of course that decision you have to make. Are you going to enter on impulse? If you do enter, and I'm not in this trade, and I wouldn't take it. So for me, for this trade, the distance for me is a red flag. So I'd wait for this trade here and do literally the same thing we did with US 30, which is wait for entries on a lower time frame. So US 30 is moving up, and give me 1 second. I need to send something out. So just observe this for a minute. Oh, there it goes. So if we win this trade again, we'll be up 1.5% for the day. And that is a 3-day back-to-back win for 1.5%. And that's like what, I mean, I'm not counting my cheeks, but 4.5%. Is that what 1.5 times 3 is? I normally tell you guys I'm terrible at math, so just a second. Let me pick up this call real quick. All right, I'm back. So I'm almost at a 1:1. So this is nice. So let's see if we keep pumping. So nowadays I'm trying to have a little bit more patience. The reason for that is,
Oh,
you
dude,
say what?
I didn't join that trade because I was in the gold trade, and then I hate trading against them. So I'm
Yeah,
in the
yeah,
sell already.
yeah, I feel you. Yeah, so gold, unfortunately for me, gold on the, yeah, so you can see the difference, right? So if you choose to hop in on impulse, yes, sometimes you'll have a nice win rate, but for me nowadays, as you guys can see with US30, I choose to be a little bit more safe, because one question I normally ask myself is, if I was doing this on a daily basis, like if I literally did not have any other income and I'm about to take a trade, and this is already at a 1:1, so I'll go ahead and set break even. So you guys can make a decision. So for me, I risked 1,500 because that's 0.75 of 200K. So I'm already up 15, 1,600, 1,700. So you go ahead and make a decision. You're already at a 1:1. Do you want to, so at the very least, move your stop loss to break even. Very least, move your stop loss to break even, or what else? Move stop loss to break even, or you can secure some. So I always ask myself, if this was the only thing I was doing for the rest of my life and I literally do not have any other income, then that means every trade that I take has to be like 90% probable. So for me, as much as this trade validated all the way up here, can you imagine? I would have been feeling so terribly right now that I entered the trade just because I wanted to be in the trade. And then I would have gotten stopped out. And then I go down to the 1 minute, to the 5 minute. And then I see that if only I waited for that trade on like just 10 more minutes, 15 more minutes, I would have gotten an entry and I wouldn't have lost that money. And sure, you can say, okay, maybe you risk 0.75 for the original trade and you only lost 0.75. And then you re-enter this trade with me, and then you make, hopefully we hit full TP, you make another 1.5. And sure, you can be up 0.75, but if you only waited, instead of being up 0.75, you could have been up a full percentage point and a half. So it's all about that patience. And at the very end of the day, it does pay. So if I was entering this trade right here, I don't even know. Let's see if it achieved a 1:1 for gold, 1912. So this would be 1909, 395. So this one wouldn't be even at break even if I had taken it. So I'll still leave it all the way up there. So we just need a nice spike up to the upside. And that will be a nice 1.5, fingers crossed, for the day. So I'm not taking any out for right now. I don't see a need to. We need to close above here. If we get closure above these zones, we should be golden. But you guys remember, right? When I turned on the zones, we just had buyers sitting here. We had order blocks, 15-minute and 30-minute bullish order block down here. So I don't use the markups and zones indicator anymore, but you can wrap them up in the trade. But if you understand the SAR strategy, and I went over this yesterday, if you do understand the SAR strategy, and then in foresight, you go ahead and turn on the markups indicators and the zones indicators, you will see that your analysis lines up with the markups and the order blocks indicators. So remember, everything I've developed, it's based off of my knowledge and other knowledge that I picked up along the way. So even the indicators that I develop for you guys are sort of related to each other. So if you understand one strategy, you'll find that it might be easier to understand the other strategy and the next and the next. This would have been a nice week to start a challenge, right? You'd have been up like 0.45, fingers crossed. This hits full TP, but we should. Yeah, so after this trade is done, that will be it for me for the day. You guys can ask any questions you might have, but after this one is done, I will call it a day.
Okay, bro, with the 1 minute and the 5 minute, how is it different to the 15 minute and the 30 minute, especially when you're entering?
So the entry strategies are always the same. So it doesn't matter whether it's on the 4 hour, the 1 hour, right? It's always the same. It's always going to be, well, not always, because I know sometimes I change them up, but it's always going to be either break and continuation or test and rejection. But in this instance, for this trade, because it was on the 30-minute that validated, the entry was based off of, the entry for this was based off of break and continuation. So either way, it's all going to come down to what direction are you trading. So you can have a test and rejection entry on, you can have a test and rejection. I'm trying to think this through the best way to explain it. You can have a test and rejection entry on the 15-minute and 30-minute, which means that if you're having a test and rejection by entry, you can have a test and rejection by entry on the 15-minute, which means that the zone you're trading is below price. So, but where the candle closes, where the rejection candle closes and the trade is valid, it's so high up such that your stop loss would be not even, your stop loss wouldn't reach that test and rejection zone. So if you are to come down to the 15-minute time frame, if you are to come down to the 5-minute and 1-minute time frame, which would mean that you took a decision not to take the trade on impulse because the distance was a bit far, so you want a retracement back down, which is what we did in this instance. You want a retracement back down. So if you want a retracement back down and you're still looking for a buy, and in this time, because the trade has been validated, but you're looking for the entry on the 5-minute and 1-minute, you would now be looking for a break and continuation because you'd be catching the trade back up. So it's always like, what entry are you trading? So if you're trading a test and rejection, the best case scenario is you get the nice entry for the candle closure on that particular time frame. So let me put it this way. Let's assume, so we traded this on the 30-minute. Let's assume that this, let me put this 500. Now, if this, so this was the break candle, this was the continuation candle. If the continuation candle had closed here, that's the best case scenario. I would have entered that trade on impulse. But because it closed all the way up here, then I have a decision to make. I'm not saying you cannot enter, the trade is valid. And according to my rules, if the trade is valid, go ahead and enter it. But you always ask yourself, okay, I'm entering here. Yes, the trade is valid, but the rules say my stop loss should be below the SARs I'm trading. In this instance, the SARs you're trading would have been 100% of your stop loss. So you wait for a retracement, which means you go down to the 1-minute and 5-minute, 1-minute or 5-minute timeframes, and then now you wait for the same entry. So if you're looking for an entry, if you're looking for buys, if you're looking for an entry on the 1-minute or 5-minute time frame, and keep in mind, personally, I do not extend SARs on the 1-minute and 5-minute entry. So which means you're dealing with a live SAR. So that means if you're looking for buys and you're using the 1-minute and 5-minute entries, the only entry you can find is a break and continuation, because you won't have a test and rejection for you to have a test and rejection on the 1-minute time frame on a live SAR for a buy, you would have already had a break and continuation. Most of the times, the test and rejection comes in when you bring in double SARs or triple SARs. Most of the times, that's the only time. But if you go down to lower time frames, most of the times, the entry you will get, whether it's for a buy, whether it's for a sell, you will get a break and continuation, unless somebody has found a test and rejection on a live SAR. Because for you to buy, for you to use a test and rejection on a buy, you would have to test and reject a buy zone. So Yeah, you cannot have a test and rejection for a buy on the 1 minute time frame, because let's go to the 1 minute time frame. The only way you can is if you extend your SARs. Now, for me, I do not, because it's just messy. The lower the time frame you go, it just gets messy if you start extending. So for you to, this is what I mean. So this right here, no, there's no test and rejection. Yeah, yeah, there's, for you to have a test and rejection on a live SAR, you would have to already have had a break and continuation. So I don't see any test and rejection. Yeah, so it all depends on the direction. So ideally, look for the trade on the 30 minute, on the 15 minute. When you go down to the 1 minute or 5 minute, it's the same thing. So what are you looking for? If you're looking for a buy on the 30 minute and 15 minute, you would still be looking for a buy on the 1 minute and the 5 minute. So you ask yourself, what entry are you getting? Are you getting a break and continuation? If you don't extend lines like me, you'll only get a break and continuation. If you extend lines on the 1 minute and 5 minute, sure, you can get a test and rejection on the 1 minute and 5 minute.
So on the 15 minute and the 30 minute, all the lines that you have, like right now on the 30 minute, all those green SARs, are they the extended lines?
Yes.
So they're not the live. So they're not the live ones.
Yes, so they're the
SARs.
extended ones, but it also includes the live ones. So for example, if I were to extend the 30 minute right here, this is a live 30 minute SAR. So this would be extended as well. So extended lines include both old SARs and live SARs.
The live SAR, is there like a timing? Like, will it show like when it like pops up?
Yeah. So if I go ahead and back, so it's not, it doesn't repaint, it shows in the moment. So that's why I call it live. So if we go ahead and replay this, you'll see the moment it shows up. There you go. So it showed up on this candle, or even on the 1 minute. We saw it on the 1 minute. So it's the same thing whether it's on the one. So let me replay this. Is it still replaying? So they all show up on live, and it doesn't repaint. So here on the 1 minute, if we play this, you'll see the moment it showed up. Let's see if that closes. Close. There. So it shows once it closed. So it showed this is it right here. So whether it's 1 minute, 15 minute, 4 hour, they always show live. Yeah.
Okay, so the higher time frames, you just extend all the lines, and when you go to the 1 minute, and the 5 minute, you just use the live SAR because it's just better.
Yeah.
So okay, the hourly and the 4 hour. Wait, so on the hourly and the 4 hour, you extend it there as well? You do?
Yeah. Yeah. So the only times I don't extend an SAR, 1 minute, 5 minute, and daily. So 1, 5, and daily, because I use the daily one to get the daily buy. So for example, right here, if I extended the daily, it would be confusing for me because I would have probably a bunch of SARs and I don't know what to use. Look at this, right? This is just too much. And keep in mind on the daily time frame, I use both the sell SARs and buy SARs. So looking at this chart right now, I would be just confused. So I call it a smoke screen. So take everything away and only leave what matters. So I'm not saying you cannot extend. If you can, there are people who are able to visually remove things that don't make sense. So if you can do it, I there's definitely profitability in extending even the 1 minute even as a scalper on the 1 minute and 5 minute. But for me, it's just too much.
The daily, like, it's simple to understand. Of course, you're just looking for, like you said, that one daily closure.
Yes.
Or a daily candle closure. But on the 4 hour and the 1 hour, you mostly look at the hourly, isn't it? What about the 4 hour? What do you see on the 4 hour?
So same thing, right? So same thing. So if my bias is bullish for US30 for the day, I start on the 4 hour. So I'm only looking for the double. So anywhere that has the double. So which is why you guys have seen this highlighted. So this has a double. So that's why I've highlighted it. This one, you can see doesn't have anything. So this one, I know that this is definitely on the hourly because this chart, I only mark up the hourly and 4 hour. So once I get my daily bias, I go to the 4 hour time frame, extend only the lines in the direction of my bias. So which is why on the 4 hour, you guys don't see any red lines. Not that they're not there. There's definitely there because even US30 has been selling, but I have taken it off because I don't want to be confused. Now I go in there and I extend. I only pick what I'm interested in. My bias is bullish. And then I look for at least a double SAR, and then I highlight that. So double, triple, quadruple, whatever. Highlight
Oh, yeah,
that.
anything above a double SAR on the 4 hour.
Yeah, same thing as 1
Yeah.
hour. So 4 hour, 1
Yeah.
hour. So actually
Yeah.
4 hour, 1 hour, 30 minute, 15 minute. So the strategy does not change. The only thing that changes from the daily to the 4 hour to the 1 hour to the 30, 15 minute, 5 minute and 1 is, am I extending the lines across all of them? So for me, the strategy, so I can trade the way I traded on the 1 minute. The only difference, and I don't want to confuse folks. So the only difference about how I analyze markets is that I do not extend my lines on the daily, 5 minute and 1 minute, but the entries are always the same: double SARs and above, and looking either for a break and continuation or for a test and rejection. So of course, I told you, if I'm looking to buy, for me, I'm not going to get a test unless I can find a perfect, unless I can find an example. I don't think you can get a test and rejection for a buy on a live SAR on the 1 minute, because for you to get a test and rejection, that means you already got a break and continuation in the beginning. So the strategy is the same on the 4 hour, on the 30 minute, on the 15 minute. The entries are always the same, either break and continuation or test and rejection. The only difference is, personally, and I'm not telling you guys that that's how you should be. Personally, I do not extend on the 1 minute and 5 minute, and it's ideally because the chart gets too messy and it just confuses me. So
So on the 15 minute and so on the hourly, you're on the 4 hour, you're looking for either break, continuation, or test and rejection. But how many candles do you look for? Is there only one?
No. So 2 candles. So this is it right here, right? So two,
Oh, yeah.
all my entries, always 2 candles. So always ask you. So if you hear test and rejection, think of that as 2 candles, which is my test
yeah.
candle, which is my rejection candle.
Oh,
So,
yeah.
right. So and you can take a screenshot of this. So all trade entries should be validated by 2 consecutive candle closures of a zone. So those are the 2 types of scenarios. So if I say break and continuation, break is 1 candle, continuation is another candle. If I say test and rejection, test is 1 candle, rejection is another candle. And you need these candles. If you're doing a break and continuation, you need both of those candles to close above that zone. For example, right here, right? Like why didn't I take the sell on gold here on the hourly? Because I was looking for this test and rejection right here. Was it on the hourly? Let's see. I think it was on that. And that trade just hit full TP. Nowadays I just be getting slipped up. It is so crazy. I am like 1 pip away from TP. So I'm just gonna hold, but that trade hit full TP based off of the markup. Now I was looking, so test and rejection. This was the test. So initially, this was the trade that I'd sent that got taken out at break even. Now, the reason test rejection, tests candle, rejection candle, because this is a sell and the zone is above us. Now, that was the entry, went to achieve the 1:1, got stopped at a break even. Okay, that's perfect. Now, the next trade lined up, but the rejection candle now became the test candle because it closed below the zone. Okay, so if I'm still looking for a test and rejection, this is my rejection candle. Now, this rejection candle had to close below this zone for the test and rejection. So both of them have to close above or below in the direction. Can't think of a more simpler way to give that. Yeah, but if you get, So the reason I did not take this sell on gold right here is because the rejection candle did not close below my zone. Now that's the importance of waiting for 2. Sometimes it will happen and I'm about to get full TP. There it is. I'm out of that trade. So the reason I did not take this trade is because if I was taking this trade, it didn't meet my test and rejection. Both the test and rejection candles did not come out. So that's why you have 2 candle closures. There are people who trade 1 candle closure, but for me, 2 candles give you more confluence than 1 candle. So this is.
So it's either one of those things that can happen. So if the break and continuation doesn't happen, it could be a test and rejection, isn't it?
Correct. Yes. So like right now, right now what's happening on gold and you're right. So if gold breaks above this zone, what's the next entry I can, unless gold comes all the way to 1918 and gives me a test and rejection, if gold breaks above and I'm looking for a sell, if I'm looking for a sell and price is above the zone that I'm trading, the only trade I can get for that would be a break and continuation. So you're right. Yeah.
So this is where the thing is a bit, I think. So let's just say we're looking for that test and rejection that we just talked about. So we got a test and then the rejection. And when you say the second candle has to close below the zone, how far? Because remember when you were saying it shouldn't close too far below, or else
Yep.
the trade would be too far, like price would be too far, and you're going to be chasing. So what do you mean, like, in that sense?
So I would say if the SAR zone from your entry is 70% of your stop loss, I would say, yeah, be on the lookout. So same thing that happened to yesterday and today. The reason we didn't take a loss yesterday, the reason we didn't take a loss today is because we waited. Because today the stop loss was 100% of the SARs we were trading. Yesterday the stop loss was 70%. So if like today 100%, that's why I even told you guys I wouldn't even have entered with, yesterday we entered with half the lot size. Today, I told you guys, today I'm not even entering with half the lot size because my stop loss was 100% the distance to the SARs. So I would say if the SARs you're trading are 70% of your stop loss, if you were to enter that trade on confirmation, be on the lookout, either use half the risk or at the very best, just wait. You'll get that retracement in a good amount of times and then just write it up. So you always want your entry. The ideal entry, and trading is not ideal, nothing in life is ideal. The ideal entry is for your confirmation to be literally at the SARs. That's perfect. That can even give you a nice risk to reward ratio. I think I gave, if you watched my weekly recap last week, US 30 you could have gotten away with a 9 pip stop loss, literally 9 pips. Even today, actually on the 30-minute for US 30 here, tests, I think it was this one, yeah. Test and rejection on the 30-minute. This was one right here, test and rejection on the 30-minute. This was a buy. You could have entered a buy here. Again here, tests, rejection. You could have entered another buy here. This one had come back down into drawdown, but this one right here is what I was looking at, but it happened like when I was asleep at midnight. Test, rejection. This one you could have gotten away literally even with especially Asia session. Asia session, you can get away with a 10 pip stop on US 30 or 15 pip. But you can see here, if you chose to even do a 10 pip stop on US 30 and say 500 pip TP, that is a nice 1 to 5 right there. So always ask yourself, what is the distance? And if it's 70%, I would say just be on the lookout and just wait for retracement.
Yeah, so this is the thing. Yeah, so when we say test and rejection or break and continuation, when you go down to the 30-minute and 15-minute, so from the hourly and the 4-hour, once you go down to the 30-minute and the 15-minute and the 5-minute and 1 minute, all 4 of those, how do you enter there? How would you see it in your mind?
No. So for me, in the 4-hour, in this hourly and 4-hour entries, I enter on that candle because the 4-hour and 1-hour candles, as much as they look like they're moving heavily, most of the times they'll give you that nice entry next to the SARs. The problematic entries are 15-minute and 30-minute because price is more volatile down there. So the lower you go, the more volatility you'll experience, which is why for me, I loved trading on the 4, and I still do. The only issue with the 4-hour and 1-hour entries, you'll probably get like 3 trades a week because some of them might happen when you're asleep. Others might happen during manipulation hours. So the only issue with them is that they might happen, but they give you the best entries because the stop loss is nice and close to the SARs. The issue comes when you start going down to the 30-minute and 15-minute. That's when you start seeing volatility in the market. And that's when you start either being faked out, as Desire had talked about yesterday, and then that's when you have to make that decision. But for me, like for example, in the 4-hour and 1-hour, what I normally do, so you remember that I told you guys sometimes I enter on impulse. Now, if the 1-hour closed so far below, if a trade validated on the hourly and it closed so far below, and let's say I was waiting for a sell, if price comes back up to the zone I was trading, yes, I can go down to the 1 minute and 5 minute, but because it's the hourly and 4 hour, if price comes back in that zone, I will sometimes enter on impulse. Because I know this is the hourly, this is the 4 hour candle. So the volatility here is not that much if you're looking at it. But if you're trying to enter, if we tried to enter this, because you remember I mentioned it on the live session, I said sometimes I enter on the live on impulse. So I said, like sometimes I would enter here. You can see how you can get burnt entering all of this on impulse. So that's why for me, even the impulse trades, they're mostly 1 hour and 4 hour zones.
Yeah, so hourly and the 4. So when you go, let's just say, for example, when you look at the 30-minute and 15-minute, how would you do it there? Like compared to the hourly and 4 hour? It's just so
What do you mean by how would I do it?
like when you say that the hourly and the 4 hour is much more clear, but when you say the 30-minute and the 15-minute, it fakes you out. How is that? Like, what's the difference? Like, how does that happen?
So I would say this. So you see, it's literally this. So the strategy does not change. So same thing, whether it's on the 4 hour, it all comes down to, is the trade valid? That's it. It all comes down to, is the trade valid? If the trade is valid, what is the next step? You ask yourself, okay, you have your risk to reward, you have your stop loss, you have your TP. So you ask yourself, how far is my, so the number one thing is always, is your trade valid? If your trade is valid, it does not matter whether it's on the monthly, daily, 1 minute, that does not matter. The validity of a trade, that is literally what matters. So once you enter that, and then once you've drawn up your TP and stop loss, then price will tell you, or your markup will tell you how far your stop loss is from your entry. And then at that point, I said 3 decisions you have to make. Take the risk, enter with full risk, or enter with half risk and save your other half for any possible retracements that you see are very possible. Or number 3, wait and go down to the 1 minute and 5 minute. It's as simple as that. So don't overthink it. So it always comes down to, first understand break and continuation. For me, I can see a break and continuation, test and rejection without even flinching. My issue normally comes with, like, even when I battle with myself, okay, the test and rejection, break and continuation is valid. I never have issues with that. The issue comes in, am I going to enter with full risk? Am I going to enter with half risk? Am I going to wait? Now, if you choose to wait, that is a very disciplined trader, but it takes a lot of discipline and a lot of learning for you to choose to wait. So it's always going to come. So forget about the timeframes. The entries are always going to be the same. So if you ask me whether it's on the daily, that doesn't, like, the validation is the easiest thing to come to. And once you, because that helps you beat FOMO. The thing a lot of traders struggle with, they enter in on impulse, myself included. So that's what you need to work on. You should be like, okay, am I able to see a break and continuation? Am I able to see a test and rejection? If you're able to do that, that is step number 1. And it won't matter whether you're trading any instrument. I can pull up Bitcoin here. I can pull up everything and I can show you guys how you can do it. But what I can't do for you guys is, after the trade is valid, are you going to take it or not? That is what you should be focusing on.
Yeah, so this is so the live SAR on that, so the hourly and the 4 hour, the live SAR, you're looking at that. But when you go down to the 30-minute and the 15-minute, you look for that same, you just look for the same live SAR, but you look for
no. What time frames did I say I trade the live SAR on?
So the hourly and the 4 hour.
No. The only
daily.
time frames I have a live SAR, daily time frame, 1 hour and 5 minutes. Actually, forget even the live SAR. Here's the question: why do I trade a live SAR on the 1 hour, on the 1 minute, 5 minute, and daily? It's ideally because of clutter. I'm not saying you can extend. If it's easier for you to extend everything, you can. But if you can go to the 1 minute and leave the SARs extended and be able to trade this, well and good. For me, I cannot trade this. So it all comes down to that. So the only reason I trade the live, it's not because it's better than extending. I didn't say that. For me, visually, I just cannot deal with this. Yeah.
you know the extended SAR lines? What are they? I know they're the previous lines.
So
They're the
it's every SAR. So think of it. So let me put it this way. At any point, the extended is at any given time in the last 500 candles, the the SARs in the live SARs in the last 500 candles extended.
So let's just say, you know, when you say double SAR, triple or quadruple SARs, do they all get printed? So let's just say, for example, on the hourly, was it on the hourly where you look for a double SAR as well, right?
Yeah.
So would a double SAR be printed? Two double live SARs, would they be printed at the same time, or would it just be one?
No. It's always one. It's always one at a time. So
Okay.
think of it this way. If I were to, okay, let me go here. Let me not choose to extend this. So I will not extend, and I will turn on only the live ones right here on the 30-minute. And I turned on both green and red. So what the extending does, every live SAR you're seeing here, which was live at some point, if I extend it, the value you put into the input right here extends by that X amount of candles. So if here you have 5, the live SAR will only be extended by 5 candles. If you have 500 in here, which is the limit, that will be extended by 500 candles. So if I change that value in there to 500 and I go all the way back to, my bad, I go all the way back to here. I go all the way back somewhere random. If I put 500 here and I'm trying to see, oh, okay. So I can't go too far because it's 500 limit. So if I were to extend here, this green one, this red one, it would extend for 500 candles, which means at some point it wouldn't show up where we are right now, depending if it's 500 candles or more. That's all that happens. So extension, the only thing extension does, it extends by X amount of candles that you put in there. So that's all it does. So there are past and present live SARs that are shown once you extend. That's it.
So the double and the triple SARs, when do they get printed? Do they
It's
get printed?
It's the same thing. So if you had, okay, think of it this way. If in the last 1 hour, or even the last 4 days, you had, let's say you go down to the 30-minute, even the last 4 days, or let me think of it this way. Even the last 1 day, you had on the 30-minute time frame, 3 live SARs that have been printed, and you choose to extend them. That's how you get three. That's how you get triple SARs. Even the last 24 hours, you only had 1 30-minute, which I don't think is possible, but let's assume you only had 1 live SAR and you choose to extend it, you would only get 1. So that's it.
Okay.
Yeah.
Okay.
So that's why the lower the time frame you go, you'll get more SARs. The higher the time frame you go, you'll get less SARs, because SARs, they're printed. If you go on a higher time frame, you have to think of it this way. If you go on the daily, it has to mean that the daily time frame has to print a live SAR, and it takes a lot of price action for a daily candle to print a live SAR. So which is why here, if I go on the daily time frame, you'll see, for example, when this buy was formed, it was formed Wednesday, 12th July. When was the next sell formed? Thursday, 3rd August. So ideally like 3 weeks, 3 weeks apart. So and that is the concept. So that is the concept right there, which is why on the 1 minute, 5 minute, I'm not extending my SARs, because I know on the 1 minute, on the 5 minute, an SAR gets printed every 10 minutes, every 15 minutes or whatever. So I'm not interested in that. Yeah.
I see. So on the 1 minute and the 5 minute, even on the 15 minute and 30 minute.
Yes. Like yeah. So same thing. It's all about how. So always know, the lower the time frame, the more the SARs. So of course, if you're comparing daily to 4-hour time frame, 4-hour time frame will have more SARs than a daily time frame. Daily will have more SARs. If you extend, daily will have more SARs than a weekly, than a monthly chart.
Oh, so I see. So the when you're saying the 15-minute and the 30-minute double SARs, it's because they're printed like nearly every like 15, 30 minutes.
Correct.
Ah, I get it. I think I need to get the indicator again.
Yeah.
So what's it called? So that's what you mean by double and triple and quadruple on the 15-minute, 30-minute. Oh,
Mhm.
yeah. So I was thinking when you were saying 15-minute, double, triple on the 15-minute, 30, I was thinking, what is this about? But then when you said it every 15, 30 minutes, another one is getting printed.
Well, it's not
Then
every 15, but it's
nearly or
yeah.
around that.
The SAR, it depends on price action, and you can look
Oh,
up
yeah.
how SARs work, but it depends on. So I'm not saying it's every 15-minute, but
Yeah.
it just gets printed more.
Yeah, more often. Yeah.
Yeah.
So let's see.
Yeah. And
Yeah.
then,
So
no, go
one
ahead.
last
I
thing.
have to drop off
Yeah.
soon.
Yeah. So how many minutes left? Would you say?
No,
Right.
go ahead and ask.
Yeah. So when you were saying when we say stop and reverse, right?
Mhm.
I know you said just think about the SAR, but if we know that it means stop and reverse, doesn't that mean we should also think about the opposite?
Yeah, which is why I told you guys here on the daily, if I am bullish on US 30 here, I told you guys, if I am bullish and a sell SAR is printed, and this is only on the day. Okay, same idea, because I know you probably ask on the 1 minute. So same idea. If alive, and this is, for me, this only works when you don't extend them. If I am bullish on US 30 here, and keep in mind, I'm only bullish because a daily candle closed above, but we get to a point where a daily SAR, sell SAR, the opposite is formed. Because I know it means stop and reverse, I could have bought US 30 here when this candle was formed, when this SAR was formed, because it was live SAR. I could have bought there. Yeah. So you can use it for the opposite. The only thing is that you have to be careful, because there are times when, yes, you can enter that buy when that live has just been printed and this candle just drops heavy. So yeah, because ideally you're countering. So yes, you can do that, but do I recommend it? Only if you know what you're doing. Like here, same thing that happened here for US 30. Bias was bearish. When this green SAR was printed, you could have entered a sell on US 30 here, and then you could have rode price down. So yeah, you can use it for the opposite.
And this is the last thing. Yeah. So when we're setting the stop loss and the TP, I know it's always the same, isn't it? On the SAR, how much is it? Is it 60 pip TP you go for?
Gold, I do 30, 30, 60. So 30 stop loss TP. US 30, I do 50, 100. FX pairs, I do 30, 60 or 25, 50. But don't have anything less than 30. If you can, but for all three instruments, don't have anything less than 30 pip stop loss. So even for US 30, you can get away with 30 pip stop loss.
And TP, both. Right?
No, so it's always double. So I always say, for SAR, the best thing, it can give you a nice risk to reward. So whatever stop loss you have double the TP. And then once you reach a 1:1 set break even.
Yeah. So when you were looking on the showing the 15-minute and the 30-minute, you know the SARs at the top. There's more. You know, you were showing there's more SARs at the top. What are they? Why are they printed up?
What do you mean?
Like let's see.
So they are printed because I've extended. They're not live.
Let's see. Oh yeah.
They're here because they're previous, because I've extended. If I change this to 5, they're not gonna be there.
Oh, so okay. This is just thing. Yeah. So this is the thing. So when you are entering, when you say go for 60 pips, right? What is that based off of? That I know
it's just based off of my back test. So that is what I tell you guys. So you don't have to do everything that I do. It's back test, see how far back you can get manipulated. And I told you guys, right? If you take a screenshot of this thing. So I've gone over the SAR strategy here. So what is the stop loss dependent upon? Set stop loss below or above the parabolic line, depending on the direction. A better stop loss may be below or above the previous high low. Recommended stop loss is at least 30 pips. You don't have to do a 30 pip stop loss. You can do a 100 pip stop loss. You can do a 10 pip stop loss, but make sure that your stop loss is below. So the 30-60, for me, I just do that because I have a trade manager. So I don't want to keep changing the values of my trade manager every time I'm entering a trade. So always make sure at the very least, your stop loss is below your SARs. So today, if like how we did this on the 1 minute, you didn't have to have a 30 pip stop loss, right? So always ask yourself, can I get manipulated with the stop loss that I'm using? So here, you could have gotten away with so the SAR we were trading was this one. So you could have gotten away with, what is this? This trade had no drawdown. You could have gotten away with a 5 pip stop loss on US 30. If you wanted to your stop loss to be below the previous high low, right there, you get away with a 7 pip, 8 pip stop. And this trade could have given you 1:20, 1:30. So you don't have to use a 30 pip stop loss. You do not have to do that. But the key thing, always make sure your stop loss relative to the SAR you're trading, make sure your stop loss is below that. That is what's going to tell you whether to use a 30 pip, to use a 60 pip, to use what amount of pip. The 30 for me is just what I've back tested, and through I've found that this can survive the test of time. Now, sure, you can do a 7 pip stop loss if you want. I'm not that trader to use a 7 pip stop loss on US 30.
So this is based off of all of the time frames you enter, whether it's 1 minute, 5 minutes.
Yep. I never change. I never change. The only thing I will change is what I'm risking. So I can risk 1% and still have a 30 pip stop loss. I can risk 2% and still have a 30. I never change my stop loss. I just don't want to be changing too many things on my trade manager.
Okay, so this is the thing. Okay, I don't want to keep asking the same thing again, but I just have to, it's just in the mind, it's just plain. So, you know, when your bias on US 30 was bullish, right? The daily bias, right? So when you went to the 30 minute and the 15 minute, you were looking for the same thing, right? The live SAR. So when you went down to the 1 minute, what did you see there? Like, I know the live SAR, you look for it on the 1 minute, but I don't know how to say it. How do you see it in your mind? Like, how do you compare the 1 minute live SAR to the 15 minute, the 30?
I don't use live SAR on the 15 minute.
So which one is it? Is it the?
So let me ask you this question again. What time frames do I use? And forget about the live one. You don't have to. Here's the question for you. When you're on the chart, can you handle having? If I could, I would extend, because I hate coming to this indicator and changing from 500 to 5. Let me ask you this question. Are you able to trade extended SARs on everything?
No.
Like even on the 1 minute?
No.
Okay. So for me, the only time frames, again, 1, 5, and D, 1 minute, 5 minute, and daily. Those are the only time frames that I will use the live SAR for. Not to say you cannot use extended. So what am I looking for here? So here, if I'm looking for an entry on the 1 minute and 5 minute, and I'm looking to buy, what did we talk about? Why did we enter this trade we entered? Why didn't we enter? Because the question comes back to, what did I tell you guys? Trade entries are always 2. It's never maybe it's gonna change down the road, but right now trade entries are 2: break and continuation, test and rejection. So here, if I was trading on the 1 minute, which we did enter on the 1 minute, I'm looking for a break and continuation or a test and rejection. So I told you guys here, if I'm buying, I don't see a possibility for you to get test and rejection if you already did not have a break and continuation. So I told you guys, I am looking for 2 candle closures above a live 1 minute SAR. So this is why we didn't enter a buy here or all the way down here, because the 1 minute did not give us an SAR. So when it printed the live SAR, this 1 minute candle closed above it. And I told you guys, I am waiting for the next one to close above. This candle did not close above, which is the reason why I did not enter here. And then I said, let's wait. What happened here? This 1 minute candle broke and closed above. That's the break. So I told you guys, let's wait for this continuation candle to see how it's going to. If it closed above the live SAR, that's when we are going to take the trade. And guess what? It did close above. And that's the reason I told you guys I am taking that buy on US 30. Does that make sense?
Yeah, that makes sense. And what was the what was the TP?
The TP for this was 60 pips. So I said I'm taking it 30 pips TP. So you always see me when I'm taking a live trade. I'll come in here. So for this one, so it was US 30. I came in here, put 500 here. So that's 50 pips and 100 pips TP right there. So 50 pips stop loss, 100 pips TP, zero drawdown.
Yeah, that was really good. Now, let's just say now that it's, of course, the trade's done. Now to look for the next one on the 1 minute, would it be the same thing
No,
again?
no, I don't trade on the 1 minute. See, all my trades, I do not trade on the 1 minute. 1 minute, 1 minute is only for entries. 1 minute and 5 minute is only for entries. All my trades, 4 hour and 1 hour. I'm not gonna come back to the 1 minute. And I've said this time and time again, I do not trade on the 1 minute. So I come in here, if I'm looking for the next trade, I would come here to the 4 hour and the 1 hour, and then I would mark up, I've already marked up my zones. So I would identify a trade on the 4 hour and 1 hour. Now, if you want to trade on the 1 minute, yes, you can do that, but I don't have any strategy. 1 minute and 5 minute I only use them for entries if price has closed so high above a 30 minute, a 4 hour, a 15 minute. So I don't use the 1 minute the 1 minute entry is only if the trade has been validated on a higher time frame. The 5 minute entry is only a trade if only a trade has been validated on a higher time frame. I do not use the 1 minute and 5 minute as a primary. Like if right now my bias is bullish on US 30, I'm not gonna go and find a trade on the 1 minute. I'm not a scalper. I haven't been a scalper for months. So I am bullish on US 30. I am going to come here on the 4 hour and I mark up my double SARs and my triple, whatever. I go down to the 1 hour, I do the same thing, and then I wait for price to come to me. I wait for price to validate. I go ahead and enter if price validates. That's it. The only times I go down to the 1 minute is this, like today. I told you guys most of the times 1 hour and 4 hour entries, you won't get such a big drop of a candle unless it's during heavy news. When you go down to the 15 minute and 30 minute and you analyze them the same way I just talked about the 4 hour and 1 hour, then sometimes you'll get the validation candle is so far away from your SAR or whatnot, but the trade is already valid. So you come down to the 1 minute and 5 minute and then look for an entry there. Now, if that's too, and I can understand how that can be confusing. If that's too confusing, forget about the 1 minute, forget about the 5 minute. Just look for trades on the 15 minute and 30 minute. And if they validate, go ahead and enter. That's it. That's all I'm going to say. The best thing with going down to the 1 minute and 5 minute is that it protects you from getting faked out. But if that's too confusing, look for the same trades on the 15 minute and 30 minute. Find that entry. If the entry validates, either wait for price to retrace up. If the entry validates close to the SAR, that's the best case scenario you'll have. But if you cannot understand, so the problem I see, maybe you're not understanding trades on the 4 hour, 1 hour. So first understand the trades on the 4 hour, on the 1 hour, on the 30 minute, because if you start trying to tie everything together, you'll just be confused. So forget about the 1 minute, forget about the 5 minute. Just and watch the weekly recaps that I do. And even today, like I'll recap this trade and save it in order to bulk it up. So I go over everything. I go over like we didn't get like today I'll say we didn't get a 4 hour entry, we didn't get a 1 hour entry. We came down to the 30 minute to the 15 minute. So a double break and continuation, but due to the distance, waited for a retracement back down and then went to the 1 minute and 5 minute. So watch my weekly recap videos and that has everything. But if you cannot understand if you're having trouble understanding the 1 hour, the 1 minute and 5 minute, first understand the 1 hour and the 4 hour, and then calm down, and that will help you.
That's good.
Yeah.
All right, bro.
All right. So that will be it for the day. Unless anybody else has any last questions, but yeah, that should be that was a nice 1.5 for the day. I will catch you guys tomorrow. All right, see you guys.